Welcome to Buy, Hold, Sell. My name's Matthew Kidman, and today I'm joined by Andrew Mitchell from Ophir and Tony Waters from QVG, and we're talking the sweet spot, mid-caps, high growth, high returning mid-caps. Tony, I'll start with you. Huge performer over many, many years, ARB, buy, hold or sell?
It's a hold. Extreme valuation, 30 times PE for a stock that it's a grower, but growth has slowed in recent years. Exceptional management performance over a long period of time. It's not a sell simply because the diversifying their manufacturing base away from Australia to Thailand, which will give them extra margin, and again the currency is a tailwind given they have significant US exposure. But I can't justify the exposure given we've had medium-term EBIT growth in single digits.
Okay. Utilities, accessories, high growth, buy, hold or sell?
A sell from us. We've got 20 stocks in our mid-cap portfolio and it just doesn't cut it. It's growing at 10% with a 30 times PE. Every fund manager owns it. It's very well known, very well understood. We like the companies that are not well understood. It doesn't make it for us.
Okay, we're teaching the Americans how to make coffee, how to make juice. Breville, buy, hold or sell?
I'll say a buy. They're up to, over US $200 million in sales in the US expansion movement. Now they're going to Europe and you'd have to back them to do well there, so I'll say a buy.
Breville, terrific products, Tony. Taking it to the globe, buy, hold or sell?
Top products, yeah, it's a sell for me. Consumer hardware priced at 24 times earnings. EPS growth compound over the last 5 years, even with a good forecast into FY18, is circa 4%. It looks a pretty good outlook, but earnings in a consumer hardware business can be quite variable over the medium term. Priced at a premium to DeLonghi. Sometimes Australian stocks in a rarefied atmosphere do get priced at a significant premium to global peers, and can't justify the valuation.
So, okay, let's go inside the toaster maker and have a look at the cheese. Bega Cheese, buy, hold or sell?
That's a sell as well. Yeah, look, I mean, the management's been smart to diversify at a very hefty share price to raise money to go into more of a branded staple consumer goods business with Vegemite and Kraft peanut butter. But on that sort of mature business, you should be getting yields of 3 to 4%. This is a yield of sub 2% and a PE similar to ARB at 30 times PE, with probably over-earning historic environment, given the malaise with their competitor Murray Goulburn. So to me, it's a definite sell.
Okay, but that all said and done, Andrew, cheese is back in vogue. I'm allowed to eat it again. It's good for me. Bega, buy, hold or sell?
We see it as an expensive company that's got good management, but it's too expensive for us. The Murray Goulburn Saputo coming together, we think that assets will drop out and that provides you some opportunity, but it's not enough to get us across the line, so I'll say a sell.
Okay, let's get into debt ledger buying. Credit Corp, Australia, US, buy, hold or sell?
Good management. It's caught in the crosshairs now of short seller notes and the likes. I'll say a weak buy for us. We don't own it currently and we have in the past. We've sort of got a watching brief on it, but I think that as long as this market holds out, management will deliver, and as long as they keep their funding, which is a big risk, they'll deliver and it'll be a good result. It's
been on the nose a bit lately, Credit Corp. Had great growth, Tony. Buy, hold or sell?
Well, the valuation having come back somewhat and very high regard for the management team, I'll keep it on a hold rather than a sell. Good outlook and hold also for there is a good long-term outlook potentially in the US, but significant OPEX up front to be able to support that growth, and we are unlikely to see the upgrades in terms of domestic ledger purchasing that we have seen in previous years. So the D-rating I think is justified in the stock and it's a hold.
Okay, salary packaging. Do you have to be smart to buy Smart Group, or is it a hold or a sell?
Well, I mean, the market's consistently underestimated Smart Group's earnings in recent years. Again, very good management team who's allocated capital very well for shareholders, and they've got a balance sheet that will support that to continue. It's at a higher multiple than it has been in the past, but I think you can still continue to buy this stock, taking a longer term view.
It's been an absolute cracker since it listed a few years ago, Andrew. Buy, hold or sell, Smart Group?
It's a buy from us. The market we see is completely underestimating the margin power that they have. We've spoken to lots of people in the industry and other companies in the industry, and we think margins can go higher than this. They're running 6 platforms. We think it should be down to 2. So it's got a good cost out strategy, along with 10% sort of organic growth it does year in, year out, and a good balance sheet. And they have been good allocators of capital, and we see acquisitions coming. Look, there's a lot of good things you can say. It's 30% return on equity and 45% EBITDA margins. It's a buy.
So if you're really smart, there's still things to find in the mid-caps, but overall, they're very, very expensive.